Hello everyone, and welcome to a new week. And are you ready for stocks, commodities, currencies, and cryptos? We've got all of those today in the show. How's everyone doing out there around the world? I hope you're doing very, very well indeed. And we've got more intervention coming through these markets. As per usual, we'll go over our market thoughts. And then as we get closer into this open, which is only less than 1 hour away now, we'll be dialing in on a couple of stocks and some other things. But yeah, the Japanese yen, this is where the action's at the moment. Very dangerous. As we've discussed several times on the stream, this is not the place that you really want to be right now. It's one of those big problems when you discuss the concepts of intervention. You can see how fast it is. This is a 5-minute chart, and in 5 minutes, the currency basically wipes off 2.74%, which as a currency is a lot of money. So there was intervention today. It's now retraced that, and it just shows it is the market versus the central bank. And historically, this hasn't usually worked out very, very well. It's big issues here. Waka Waka says Bank of Japan messed up on the charts with their injection. Yeah, they've messed up on a lot of things with what they're doing here. So this week is going to be really covered by these big events. And it's not so much that it's a news event, it's earnings. We start off with some okay companies today, but really we move into Tuesday being the big one. Coca-Cola, Microsoft, and Google. They will be the ones that everyone's looking at. Then we go to Meta. Then, of course, we go to the big two down here, Apple and Amazon. So this is what I like to call super earnings week. It's always one of those times, guys, that we have to pay a lot of attention to the markets. We don't know what the expectations are. We obviously do know that Apple is reducing some of their outputs for the iPhone 14, and that's not going so well. So maybe potentially it's not going to be so good. I mean, we just don't know. Earnings season is such a guess. Generally, stocks run into those, and then we find out the real movements. Let's have a look also at the options moving forward this week. And if we have a look at the options moving forward, we'll just go through the 24th. So here's today. The maximum pain is at 371. Stock price was currently 377. Now, you don't generally use maximum pain outside of the 3rd week expiration, guys. I've always said this for a very long time. And the reason why that is because we don't have anywhere near the same amount of open interest in options. There's not as much money at stake. Therefore, there's not as much probability of things happening. What we can say, though, is that 360 and it looks like 370 remain kind of the big put levels today. If you want to go with put walls, and 400, yeah, that's not going to happen. Seems to be the big call on the top end side. I'm sure a lot of you would hope 400 would happen. Then we move through to the 26th, which is Wednesday expiration, 369 again, sitting around those 355, 360s and 365s for the puts. And then we go to the 28th and we get the 355 put sitting very, very solidly. Again, maximum pain sitting right around this current price. Gary actually says here, the long leg doji is usually what happens after super earnings week. Well, if that's true, then that would be pretty good for the max pain, wouldn't it? We open at 377, we go down, we go up, we go all around, and we end kind of in the middle. Imagine if that was what to occur. I don't think it will be, though. I have a feeling that we'll have some decent action this week on both sides. So this is where the earnings lie. If we scroll through and keep going to the big options expiration in the next month, always look at your calendar, guys. Go over to November and make sure you look for the 3rd week option expiration. So 4th, 11th, 18th. And here you can see that we have maximum pain actually higher. Open interest strikes on both sides. Already 4 million open interest for November, and mostly a huge amount of puts sitting to protect kind of that low side. A lot of people are getting very, very bearish in this market. I think we're starting to move to the bullish side, and we'll discuss that very soon. So we'll go through a whole bunch of things. $77, $4 super sticker. Thank you very much, Sandola, always for the support. Appreciate it very much. And yeah, if you guys are enjoying the streams that we put on here on Mondays, make sure you give us a like. Smash that like button, guys. It does help us out. So let's talk about this US 500, everyone. Let's discuss the stock market. Now, I've got a little box down in this previous little buy up demand zone that we've seen before. And this would be kind of the case that we talked about on the Friday and weekend videos, that idea that we ended the week fairly strongly. Now we pull back and we find buyers coming back through. And as we build a case for this, we'll talk about it using the dollar index, using a whole bunch of other pairs very soon. Let's go over to the weekly, though, so we can take a look at how some of these previous weeks have closed. So it was significant. It was a significant weekly close. It closed above the long leg doji. So here's the high, here's the low, obviously the open and the close. We've now closed above that wick, and we've done it with a solid candle. Now, when you do things like this, it kind of reminds me a little bit of over here, where we had a bearish kind of candle, and then all of a sudden we've gone bullish, and then we had weakness followed by buying strength that then created a bit of a rally. Now, in this case, we've got to be careful. If we do see a rally, do we really believe it will hold up? And I'm going to ask the chat, what do you guys think? Stevie Jackson obviously coming in here with the crash is already over. So yeah, the crash is already over. So what do you guys think happens if we do get to these levels? Let's say we go up to 3880, 3900, or we get all the way to 4100. My guess is those kind of levels are going to have interactions with them that will look like sell-offs, and they may be where we get bigger turnaround events that go more negative. C-Dub says, I think you're going to go to 320. I'll see you there. Fair enough. By April 2023, Mez Zero says 4,300. And Bjorn says, don't know as I see VIX won't put over 38%. I think you're talking about the VIX going over the 35 kind of level. Crash has barely started, said a few people here. So a lot of people got a lot of different opinions. There's a few people that believe it's going to 3,900. A few people that thinks it's going to go to 3,400, 3,200, being very, very good. I think my base case here, if we do fall through, would be like a 3,400 or a 3,250. I would be more prone into the idea of a 3,250. So yeah, I do think that that's the more likely kind of scenario here, going into that 32 kind of 60, 50 zone in the future. So many people want this area. They really do. Bonds traders alike, they've all suggested that this is one of their key zones in the future that they're looking for. And yeah, how we get there, though, is the most important thing as a trader. How do we find it? So we have to find out whether there is a rug pull that's happening now or whether it happens later, and which side we want to be on. So we looked at the weekly close. We know that it closed at this stage fairly bullish. It rallied this morning and it tapped the highs. So it came into these 3,800 highs, which was a previous daily close. So if we have a look here, we had a daily close that got into that 37.91. We've come up and we've come back down. So we now look like we've kind of got a trough, a peak, kind of like a higher trough, then a higher peak, then a higher trough. And we don't want to breach underneath here if you're feeling a bit more bullish. If you want this thing to now rally now and this week, it kind of needs to pull back and then rally over the next couple of sessions. Let's now scroll the smallest time frames. Let's go to the 15-minute here. And this is where things get pretty interesting. So can the market go negative enough to push down a little bit over 50% of this current move? So this move was fairly significant. It was very quick. It didn't really have too many pullbacks. We're on a 15-minute chart here, and you can see there's very little structure on the way up. So the market just kind of went meow all the way up. It didn't do its normal ebbs and flows kind of movement, which you more expect in a normal technical market. It just decided to ramp and ramp and ramp. So somewhere around here, I believe, holds some form of key. This is sitting around this 37.50 to 37 kind of 55 area. I'd like to see the market rally off this, move up, and breach through 38.15. Now I'm going to put a little highlight on this zone up here because check out this. What you'll notice is as we scroll across and we go over to a 15-minute chart, we've got this one random high here on the way down. And every time we keep coming up to this area, this is the high I'm talking about, this wick high. We keep selling off this zone, and we've got to be very, very careful around here, because you know what it reminds me of? So much. It reminds me of another period of time we had this, which was over here. And if you have a look, it's a very similar scenario, yeah? So here is the wick that we had. Here is the sell-off supply. Here is the sell-off supply. And then we have the third time that it comes up super aggressively and then sells it off. And that was actually the beginning of a mega sell-off. Now, where did that happen? Let's have a look at a 4-hour chart just so we can see where it happened. It all happened while forming a new low and rallying up. So this was a low that was all around that May period. Now we've got to be very careful around that because it's kind of similar. While we've formed better structure this time around, it is that kind of third touch with that little wick above. So we'd like to see that taken. Therefore, what would I like to do? I'd like to set an alert above there. I want to know when that's gone. 38, 20, 38, 19. That would be a big one here. Mr. Cresmo says, oh, I'm famous now. There you go. So you got left there. Teddy N says, these people are clueless. Are you clued in, Teddy? Are you clued in? Some people are saying the chart doesn't seem clear. I'm not too sure. Maybe just change your resolution. We should be coming through pretty solid, man. Clear for everybody else, guys? Teddy's saying I'm referring to the Fed. Oh, we don't like the Fed here. The Fed is mad. so yeah, this high I would really like to have taken. Once that happens and we wick above that, there's a good chance that we move strongly into that 38.80 to 39.20 zone. This would be fantastic. I really, really, really want it up here. And the main reason is because I want to see if we get turn changes that occur in this area. If we do, then there could be some really nice shorts that can be placed. The key with shorting or the key with longs in markets is always going to be timing, and timing is everything. Yeah. And I say here, patience, react, don't predict. The key is really to understand once the level is cleared, where we move to next. And you'll notice that so far while we've been recording today, the markets have actually done a huge rally turn off this early area. Now, if the market does do this and then takes this low, I thought everything changes, guys. At that point, we're probably looking at a big short off. So you've got to be very, very careful here. And in fact, I'm going to now mark this low that we've just had, just in case we take a new high and then turn it around, because this is paramount. We saw before one of just the scenarios that I just think is similar, because while no two scenarios are the same, the idea of technical analysis, the idea of stacking the odds in your favor, building confluence, building all these ideas, is to recognize similar patterns, similar events, and then, of course, to replicate and profit off that idea. So this is very, very important to understand. Prayot Singh, $10. Thank you very much. Market internals like advanced decline line and new highs, new lows difference have negative divergence with the SPX. I'm watching for a new low, lower low, closing low in the year on the SPX soon. Okay. Thank you very much for the donation there, Pradot. Well, maybe if you feel like that gives you edge, then yeah. I mean, anything that gives you edge, anything that gives you confluence is always a good one here. Thank you very much for the donation. Terrence says, Tom, do you think the 2-year yield is partly due to significant shorting? So do you think the 2-year yield is partly due to significant shorting? No. I think the 2-year yield is high because significant shorting is good. Should lower the chance of the Fed having to push high. Because if you scare a stock market, in essence, you change the wealth effect. Remember, what the problem is right now, in my opinion, I'm just going to give you my opinion of everything that's wrong in the world right now. So they gave everyone Stimpack checks, yeah? Or at least people felt rich. Now, when you feel rich, what do? You buy things. And of course, buying things has created demand. Now, the issue is when you buy things and you get used to that, then when you run out of money, what do you do? And I'm going to ask the chat here, what do you do when you run out of money? All of a sudden, I don't have any money, guys. No money, sad face. But I still believe that I'm entitled to buy things because I got used to doing that. So what do we do next? The best thing for us to do is to get that. Valdo says, stop buying that. Come on, Valdo. Come on. That's not what normal people do. You know this. We don't stop buying. AM does it properly. It says buy more. Exactly. We got to buy more. Oh, sorry if you hear my cat, by the way, guys. We got to buy more. So we use the credit. We got to get the credit card out. And I shared this a few weeks ago. Credit card debt is increasing quite a lot. And I don't believe it's just cost of living. I think it's that people are still buying things and living like they lived during the Stimpack times where they all felt good. They became entitled to do this. They didn't want to work jobs. We know this is true if you're a business owner. Even if you're in the workforce at the moment, you know people got kind of lazy. Some people did. Not everyone did, but some people did. So the problem we've got is, of course, this. And that's why yield keeps going up. Plus, of course, the supply problems across the board. China's non-lockdowns or lockdowns all the time don't help that situation. So yeah, yields are, look, we don't know exactly when yields would peak, but at this point, we still are seeing in this data ridiculous spending. So that's why Amazon's forward guidance, and more importantly, I believe Amazon's earnings could be one of the most important this week. Google will also be important, but I think it's Amazon and Apple. So it's Thursday evening, in my opinion, that holds the most important earnings this week, possibly Shopify as well, those types of anything to do with consumer discretionary. I want to see consumer discretionary getting flogged. It needs to be down, 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 down. Because if it's down, that means that the Federal Reserve, it's a good lead that the Fed is actually getting it done. Down. What do you guys think, though? Do you think it's Amazon and Apple and consumer discretionary we should be looking at, or is it something else? Paul says pump all week and then sell off on Friday. Yeah. So look, the concept at this point is that we have a very nice structure in the market. We closed a weekly on its high. So we're not there. We closed the weekly on its high. Theoretically, that usually means sells will be met by buys more likely than not. So that's what we're looking for at a technical level. We're very careful around this zone, and I've already highlighted that area wide. Let's now go over to some other things. Of course, people have been talking about yields, so let's have a look at the yields here. 2-year yield remains very, very similar. We're sitting at 4.5%. We've dropped from 4.6, so that's technically a good thing. Did we actually move that far down, though? Not really. So what I'm going to set an alert for is a little bit under 4.4, because I'd love to see under 4.4. Why? It would show that maybe we're topping off a little bit here on the 2-year. And would that be good for stocks? Frankly, yes, it would. In fact, the 2-year is very synergized with the stock markets. And if you ever want to do the test, put SPX on, press the button, and it will show you the synergies with it. So if the SPX is going to go up, generally speaking, we want to see something similar to last time. So we'll have a look here. And if you look at the SPX over the top, you can see when we went to a holding pattern for yields, which happened back here in June and July, we actually got a nice ramp. So we're looking for a holding pattern on the US 2-year. I don't want to see it higher. What I want to do is I want to see it lower. And if it goes into a holding pattern, it allows us to squeeze the stock market much easier. Dragon Jonovic says, well, it's up now while yields are up. Not that much. I think, look, if you look at it, you've got yields here, and then yields have gone up, and then they've come back down to kind of similar levels. So it's not up that much more. It is synergized with it, for sure. Like it's something that I would closely correlate with it. DXY, let's have a look at the US dollar here. And in fact, we'll use the dollar futures here. Will we? No, we'll just use this one. Doesn't really matter. So basically, we'll just go here, the 15-minute. And what my thought process is here is I wouldn't mind seeing the US dollar initially strengthen. So again, theoretically, we want lowering S&P today, and we want higher dollar. Dollar comes back to maybe a level like here, this 112.80 zone, and then we see a turnaround on the dollar. Now, the US dollar did actually make a new low, so that's fairly significant. We have had a lot of tests of this supply, and we tested it again on the Friday session. The Bank of Japan intervention, bang, straight down. Again, Bank of Japan intervened again today, but at this stage, we're not really ramping huge. So we saw that intervention through this candle, it looks like, and then now we're looking for something like this to occur. Ideally, they're moving towards 111, which should coincide with us making a new high in the stock market and ideally getting into that 38.80 kind of zone. And that's probably only going to be happening if we get dollar index back down to this like 110.25. So I'd love to see 110.25 on the US dollar over the next coming weeks. If we can do that, that would be fantastic. It puts us into that good, better squeeze position. And markets tend to not dump usually without trapping. It's all about the trap. And we just have to try to find where the trap is set. And that's why we're mindful the trap could be literally in here. So again, if the market goes and makes a new high and then breaches down below this low here, or even a new high and breaches down below this low here, we're going to have to change our opinions fairly quickly and make snap decisions, because that's the market that we're in. If you ever watch Stanley Druckenmiller always says the same thing. This is what he thinks this week, but he reserves his right to change his mind next week, because that's what a trader will do. If you see the market make a decision, it's your idea to have the patience to then react to those changes. And once you see them occur, bang, you can make that better decision. What about dollar cost averaging on TLT? Yeah, so TLT is getting. Is this a meme or something? What's going on with TLT? Why does everyone love it so much? TLT. I've never heard anyone care about it until basically just recently. And hey, I don't blame you. TLT's been a crapper for a long time. If we take a look at the weekly here, this is 20-year treasury bonds, and it seems to have become a meme nowadays, I believe, though I'm not totally all over that. And it's just continuously getting wrecked. And I think that's because people are looking at it and saying, well, this is surely going to be a turn story in the future. I don't blame them. I don't see how it isn't a turn story eventually. Now, what is the problem? And again, I don't think America, in terms of American Treasury yield bonds, are going to have a real collapse in them in comparison to the rest of the world. But people are claiming that if you get underneath this kind of 90 zone, which seems inevitable now for TLT to get to, you see I've got a little alert down here, that this is kind of like a sovereign debt crisis that's going to like explode and everything's going to be bad. It's possible. This is certainly incredibly worrying. We haven't seen TLT on its knees like this for a very long time. And even the last week of decline is horrible. So, yeah, I mean, it's very, very nasty. Now, let's put this in perspective. We're back. Okay, guys that own TLT. Now, obviously, you don't buy it for just capital gains. But when you look at this, we're back at 2003 pricing for the 20-year treasury. For so long, treasuries were ridiculous. During the 2018 run to 2020 run, we saw treasuries get to 176. I mean, at some point, this almost looks like if that happened again, it offers better upside than the stock market. I mean, not that that's necessarily there, but yeah, that was crazy. And there's so much, trade volume going through it. Everyone's talking about it. And I think this is the thing. It's when people lose faith in the treasuries that probably people should be looking at the treasuries the most. And recently, people have felt like it's the best. And I'll tell you, if you ever look at something like the quads, there's a concept where during recessions, treasury bonds are historically the asset that people go to. They use cash, defensive assets, e.g., defensive stocks, and things like TLT, like historically have held okay in comparison to the rest. It's just not happening this time around. So Robots Bleed says, okay, everybody, get ready to return to IPO prices. Yeah. Thanks very much to the 1,400 viewers as well out there. Appreciate each and every one of you from all over the world. You guys rock. You absolutely do. So TLT, it's getting into the 90 zone. And for long-term investors, they're looking at it probably going, damn, is this actually showing us something that's better than the rest of the stock market? Let's actually take this crazy head and shoulders that people were talking about back then. I still remember. Oh, look at that. Maybe. I mean, okay. All right. All right. Hey, what did you tell me up there, guys? What? So for anyone that doesn't know, this is the idea: left shoulder, head, right shoulder. If you're not familiar with head and shoulders patterns, and of course that would be the head, technically the top of the head, and then the whole thing points towards the sweet 90. So yeah, I mean, technically, that's what it wants. It's getting down there. What's my opinion on oil? Sure, we'll check that out. Thanks very much, Chris. Appreciate that. Can we take a look at TLT? We're on TLT. We're here, buddy. Don't worry, man. We're taking a look at it, but I'm not seeing anything other than it looks kind of nasty on the close. Now, today it's opened. Look at this. It's even gapping down. It's taking gaps. Geez, I just, you got to think it's coming in here, don't you? Let's see. Was anything that stops it before this little smidgen thing? So it might find some initial buyers, but you would have to think this is the resting place of TLT. And then I'd love to see some structure, maybe some Wyckoff. That'd be sweet. Just sit there for a little while, accumulate a nice position, and then get in. There'd be some funds getting absolutely slaughtered. Now, as long-term investors, even if people got in here, I don't think it's going to be shocking. But yeah, it's very interesting. China's getting crushed. Yeah, so the Shanghai Composite and stuff, obviously we saw some big flows there. Where is it? I think it was, my Shanghai Composite. Have I spelled something wrong here? I thought I had it up. S-Comp, is that it? Someone give me the code for the Shanghai Comp in the chat. I always forget it. I haven't looked at it in so long. Huh. I thought it was under S-Comp. Someone will give it to me. HSI, that's the Hong Kong, isn't it? Exchange. Hang Seng. Oh, that's a Hang Seng. Oh, it's bad. I didn't look at this yet today. I heard it was bad. I don't trade it though. Yeah, that's bad. SSE, is it? Thank you. Let me just have a look at SSE. What would you say here? SSE? Zero. Oh, millions of zeros and ones. 000001. Damn, those codes are very enticing. 000001. It's like code. Whenever I heard that the first time years ago, might have been 2011 or something, when I heard that it was like coded, I didn't know because didn't trade that market back then. Yeah. And I was like, what is this millions of zeros and crazy codes? So here we see it. I just wanted to see the Shanghai Composite. And yeah, you can just tell, like, markets, if you ever want proof in the pudding that markets can't go into hyperbole, bubbles in the 21st century, in the 22nd century or whatever. We don't, I mean, here it is. This can happen. This is what the Chinese market loves to do. Pumpy and dumpy. And at the moment, obviously it's not in a pump or anything in particular that's good, but yeah, it's still copping it. So the HSI was really bad though. That Hang Seng was shocking. This is why I don't go into those markets, because they're just too dangerous, and the government isn't there to protect the stock market. They only care about one thing, guys. Think about your country right now. What does the government policy support? Probably no one likes to think like this. Why do we love the American market so much? Because America protects the stock market. When you think about other countries, e.g. China, they protect the property market, guys. The property market is more protected than the stock market. It just makes sense. So you've always got to think about that. Think about the country you're in. What market are they supporting? Most of you are here, rightfully or wrongfully. You're like, yeah, I love American stocks. Good, because you're probably smart. Why? Because they protect it. The Fed comes out and says, hey, we'll buy those stocks. We wouldn't mind those stocks. The Swiss central bank, look it up. They're like, damn, what are we going to do, guys? I know. We'll convert our money into US dollars and then buy American stocks. I mean, there's so many systems out there that backstop it. And you've just got to remember that's one of the reasons why American stock market will hold usually better versus the rest of the world. Because a lot of people know it's not only the most innovative companies in the world, but also it's the most protected in comparison to many other countries out there. Just my opinion. But this is horrendous, and you don't actually know where it's stopping. I mean, if you're looking at this, you're thinking back here in 2008 prices. I mean, where's the stopping mark? Is it here? Is it those little peaks over here that maybe stop it? I don't know. But it's very brutal, and I feel bad for people that are in it if you're getting owned. That sucks. Dragon says, FX Evolution tech earnings that rely on China are up this week, though. Are they now? Interesting. Terrence says Australia protects the koalas and the kangaroos. They don't do a great job of protecting the koalas. The poor koalas are not doing so well in Australia, I believe. Which semi stock looks promising? Well, I always like NVIDIA. At these prices, NVIDIA's actually pretty cool. I mean, you look at it and you go, all right, it's not as bad as I thought it was in terms of price. I mean, you're talking about 72, it almost got to 100 the other day, and it was at its highs in 2018 at 73. And it's changed its business a lot since then. Remember, this company was once mostly a graphics card company. I think now it's moved over to the AI cloud side, storage, whatever it is, which is bigger now than its graphics card division. So it's certainly an interesting stock. I'm a big believer in the AI play in the future. Which company wins, I don't know. I actually personally terrified by AI. I don't even like it. Look, I'm not someone in my household. Believe me, there ain't no Google Alexa crap going on. I turn that stuff off, unplug it, and chuck it out. You think Siri's on my phone? Hell no. I don't like them. I know they listen. They have to. Well, I actually know for a fact they do. Shall we do a poll? Yeah, let's do a poll. You guys want a poll? Let's see what the community thinks. I haven't given too many crazy opinions yet, so let's do the poll here. All right, and we'll give the neutral option. I'm just adding it in here. All right. Wasn't properly worded, but we'll just ask that anyway, so you guys can do it. Finken79 says, I, for one, welcome the AI overlords. You welcome the Terminator? Fair enough, Finken. Yeah. George is right. You should do polls before putting everyone's thoughts on the market. Now everyone's biased. You'll find that a lot of people go against me. Don't worry. There'll be a lot of bears. They'll come in hard. You watch them go. Don't you worry, George. Don't you worry. Donkin Dave, good to have you here. You've been here for a long time, Donkin Dave. I see you. Fed will pivot in November, says Teddy N. Damn. Tom, how can you drive a Tesla in that case? That is probably true. I have double standards, Oz, double standards. But at least I can look. Am I allowed to at least unplug the Alexa? Okay. The Alexa is not coming. Bezos ain't listening to me. Maybe Elon Musk is, but Bezos isn't. Fair? Teddy N says this rally will rip my pants off. Fair enough. Well, I kind of hope so, but I don't really want to rip a rally that goes. Now, remember the likelihood of a rally going above this last high Fed pivot is incredibly unlikely. In fact, I'm not sure if that has occurred. I might do a video on whether that has ever occurred and it isn't an actual recovery, because I don't think it has ever occurred in previous history where you've seen this, except for the 70s, which got really weird. But yeah, in recorded normal history, we've never gone above these types of areas and not been out of kind of the worst of it. The market will always find the bottom usually before you see it, though. But I hope you're right. I hope we do get up there. All right, let's go through a few other pairs. We'll come over here to gold. Let's check out gold. So I actually think gold weakens here. And ideally, that is in line with our dollar strength. We want gold to weaken and then come down somewhere around this kind of 1632 to 1636 area. I would love to see it come through in this area. So yeah, this zone would be fantastic. And if we move down into here, then we could potentially see, some turnarounds that occur at this point, and you're looking for the turnaround that occurs here towards the buy side. And the main reason that is possible, and by the way, this morning anyone got into the short, congrats, is actually, let's have a look at this flag. So that would be a flag trade. Let's have a look at that pole, which will go into the leg. Yeah, that would all work out quite nicely. So yeah, I would like to see weakness in the morning on the markets, weakness in gold, weakness, strength in the DXY, and then hopefully a bit of a turnaround after that. Basically wiping off a lot of the move that happened on the Friday session so that we can come back and effectively just make sure all these prices were more legitimate, the trades go through, the volume goes through, and ideally the big players get their orders into the system. So if we go here to the weekly, the reason why this could be possible is think about what those weeklies are telling us. Look at this. It's a rejection wick followed by another rejection wick. That's two very strong moves here. Quantum Mechanic $1.99. I think the Fed will reverse course in the summer of 2023. I think that's very likely, Quantum Mechanic. Your area would be correct time-wise. And in fact, the market is predicting that at this point. Teddy N says, have you been reading about Asia buying up everyone's gold? There's a few countries that have been buying up everyone's gold for a little while. They've been doing it for ages, though. It's not new. But yeah, gold purchasing has improved. That being said, isn't pushing spot that much higher. But I really like these wicks here, guys. A weekly wick followed by another weekly wick. It kind of shows you there's a lot of demand down here. And if you think about it, weeklies are not necessarily jokes. Now you might say, but Tom, look over here. It went underneath these two weekly wicks. It did, but at this point, you had already tested this level. 1, 2, 3, 4, 5, 6, and that was the 7th time. So it was testing it quite a lot. If you go through the weeklies, these wicks are generally followed by some bullish intentions, especially when you have them. There's not that much history here, but when you see two of them together, you've got to pay some attention. And if it does break through, watch out for capitulation circus, because that's usually a very, very brutal move. If it takes the wicks and closes below, that's usually another massive continuation trade. So if you get stopped out, there will usually be a short for you as well. And I don't know if that's going to happen. It doesn't look like it. Stay away from Barber. Yeah, Barber's a bit scary on the charts. For anyone that hasn't been following the Barber, this stock is absolutely toxic. And I I tangled with the toxicity a little while ago. I remember tangling with it over here. I thought, oh, this looks all right. Because back over here, there was actually a nice little replicable trade through here. And I remember it went up, and you might as well show, the losses and the wins. You got to go with both of them. And in this point, I definitely thought that the market would rally and potentially not only push a 240, but I thought a 260 was possible. And it was forming a nice base. It all looked pretty good. And then we got clopped. And once that happens, it was all over. And look at everyone's getting destroyed. And the reason I never went back in is because I never trusted that they weren't trying to crush this business. And look at it now, 63.75. Oof. I want to ask the chat, do you guys think this thing can actually ever recover? Or do you think Barber's cooked? I mean, it's almost now. I mean, wow. It's back at the 2015 lows. I mean, it's literally at critical now. JB VBS says yes, it can recover. Teddy says no. Ken says no. Yeah, it's pretty brutal. Let's close the poll. Hopefully everyone's voted on the poll. We'll end that now. Thank you very much. If you have been voting, let's see here. So we've got bullish 46%, bearish 34%, and neutral 18%. 469 votes. Thank you very much. Poor Charlie. Yeah, poor Charlie Munger getting wrecked on here. But his time frame is not just a year. He'll be looking for well, for him, who knows what his real time frame is nowadays. I mean, isn't he like, how old's Charlie Munger? 90 something, 94, 90 something old. He's beast. Dragon says bullish equals crash incoming. Barber will grow, but just not its stock price, Richard C says. Yeah, its multiples must be incredibly low now. Only 96 years young. There you go. Thanks, David. Thank you also to the 1,455 people joining us. So we're about 17-ish minutes away from this market open. So far, we've talked about the US 500. Let's now go over some crypto quickly, and then we'll go into the rest of it. Now, you'll notice I've got crypto fairly tight ranged in here. This has been one of the most boring crypto markets that I have seen since the dark ages of basically 2000 and whatever it was, 18, I think it was. It was crap over here. So we're back in the dark ages. And I mean, frankly, it looks shocking. It really does. It looks so bad because every time that the SPY rallies or markets around the world are rallying, crypto can't even find it. I've said it for a while, and I still stick with my overall personal opinion, yeah? And I don't know it's right. I don't, but I'm just going with stats of previous times, that I think this market will go between negative 83 and negative 86%. And I did say I'll do a special video on it, and I will. But I feel like it wants Sailor. And I'm sorry, Sailor. I'm sorry, man. I just feel like there's some sneaky, nasty creatures out there that want your laser eyes, and it's like when people go hunting and they got the caribou and they put the caribou on their wall. Someone wants Michael Saylor on the wall. That's what I think is happening here, unfortunately. And yeah, I could see Bitcoin going pretty deep down. I could see it going like 9.5 to 11,500. And the reason is just the way it's structured here. Look at it. Looks like it's kind of just sitting there. It's not like there's not a lot of volume here. There's a ton of volume. And if it just keeps chilling while the stock market maybe does a little rip and then sells, if that does happen, it falls through. Wow. I don't know where the sailor is leveraged out of his mind, but yeah, I could just see it. I mean, it's the story. It's the ancient storyline of markets. There's usually one person that is just hugely influential or has like a known position, and then markets hunt them. It's kind of like what's happened with Cathie Wood. She's just been absolutely messed up. He won't be margin called, says ePromy. Okay. I thought he was like down there somewhere. Either way, the way that it's forming through here, it's giving us no real indication. It's still at what we would call equilibrium. So it's still at the fair value. Let's go over to some other markets. Let's look at Tesla and we'll look at the Nasdaq. We'll do Nasdaq first, actually. So the Nasdaq is sitting above the anchored VWAP at this point, but actually it's just below it. So you've got kind of this VWAP coming down, which we used the other day. If we go over to the 2-hour chart here, you can see that it's again found that rally. I'd be looking similar for the SPY. I'd like to see it pull back. I do not want to see it make a new high and then pull back, though. That is bad, okay? Capital bad. I would like to see the market come down and then kind of move off maybe around that 11,100 would be the level, I believe, for the US 100. Let's have a look at the 5-minute chart here. Yeah, somewhere in there, and that structure throughout here is where I'd like to see it go. People are saying the pre-market's brutal. Everything's brutal in 2022, man. Everything is brutal. Iprami says when margin calls, oh, he's got the solution. When margin calls him, you just don't answer. Yeah. That's true. That's what you can do. You just bail, yeah, you just run away. Except for the fact they probably execute you, and then you've got like $5 in your account, negative $5,000, or negative, in his case, negative $500,000 or billion or something. All right, let's move through. What was the other one we were looking at? Tesla. So let's have a look at Tesla here. Opening up at 207, down 3, not good. Take a look at the weekly close here for Tesla. Ends as pretty much a doji candle. I'm still going to maintain, based on what we've seen. Let's have a look here. I just want to show you this, guys. So if we look at the 20-day change, and we're just using 20-day change here of all the sectors, and what's Tesla Concept? Oh, okay. It's like all these companies around Tesla, I guess. Anyway, if we're looking here at all of these companies that are getting smashed, take a look at some of these top ones: automobile manufacturers, EV chargers, Tesla, energy vehicles. It's basically anything that is kind of in what we would call expensive, anything to do with demand and frivolous kind of expense. A lot of people bought cars. I think it's clear to the market that people are going to not buy cars anymore. And in fact, there's going to be a glut of sales coming through. You can already see it. And the market is punishing them all. And it's across the board. If we go here to where is this? We've got the US, we've got the heat map here. When we scroll over to the heat map, go top 50, percentage change 10 days. It's very clear to me that we're selling certain sectors. Automobile manufacturers are getting flogged. That is one of the flogged areas. It's clearly out of rotation. Home improvements are getting flogged. This isn't 2020 anymore. And that's what's happening. They're smashing down these sectors. So if you load those sectors onto your charts, you're going to see that's where the money's been flying at it recently. And that's showing that the stock market believes demand destruction is here. So the stock market actually believes that. It's not just anything else. They're crushing these particular companies. And NIO is one of them. Tata Motors in there as well. Both should be down way more. Well, potentially that's an opportunity. Look, I'm just going to be patient, just chill for Tesla myself. If we go into the small time frames, let's have a look here. 207. I mean, we know there's been buying that's come in around this 206, 205 level. So I guess if you feel bullish and you think there's a gap close and all those types of things, but if what we believe might happen on the stock market does happen and stocks drop maybe 1% throughout the day, you're going to be seeing Tesla push into the 205 again. And whether it finds buyers there or not will be the question mark. If it does close back below the lows, be careful though, guys. Next stop, 180 town. What do you think the Tesla's going to hit though? My Gardner says odds of Tesla hitting the 50 MA on the 1 month. I'll put the moving average on. On the 1 month, hey? We'll use a bigger red. Let's have a look at the 50. Where's that sitting? I don't know. The 1 month. Down here at 150. Look, you need probably a 3,200 for the stock market to do that one. It could happen anyway. It just depends on how maybe the market wants to hold up, what it wants to move into. But if we do make a new low and close below, I think 180 is the next stop for Tesla. That would be the most likely kind of scenario there. Let's move over to US oil. A few people asking about oil here. Very ridiculous trade days on oil. So tough market. Okay, this is where it gets kind of interesting. You had that downward trend line that came through these highs. It breached that. It then went underneath, which signified to me bearishness. And I guess I'd still be on the bearish side of oil. I don't have a reason to say bullish at this point. It looks like it just keeps coming up and then finding, basically supply and selling off. And everywhere around here is this 86 kind of level, 85, 80 to 85, 86 is still a short zone. So I'm still probably negative on oil. Tesla margins are still unbelievable. Very good Tesla margins. Kevin says, I'm expecting Tesla to detach from the market in the next 6 months. Yeah, it's possible. Have we done the DXY? Yes, we talked about the dollar index. So we've got the stock market coming in. 8 minutes off the open here, guys. Thank you so much for joining us today. We've had a up, down, and all around market. This is the 1 hour chart, so you can see what's been happening. We're looking for the market ideally to come back down, not to make a new high first, though, before doing that, to come down in today's session, potentially hit around this 3,700 zone. Wait, that's a little bit too low, I think. I don't want it that low. I just want it down here. Let me just have a look here. Oh, no, that's correct. Yeah, 3,700 zone. I was just having a look at the overall. So down to the 3,700 zone. And then at this point, we're ideally going to see some form of turn. Now, the reason we want to see a turn here is because it's made a new peak. It's testing this area, which no doubt we have to pay a strong amount of attention to, guys. There's a 38.15 kind of, or 38.19 little resistance high over on the left-hand side. You must be very careful on. And this could still be an epic sell-off level. For bears, if you do get that high and you see that initial rally, and let's say that initial rally comes up to here and then sells off down below, well, we'll have to change our complete tune. It will be a significant difference to what we're currently looking at. At this stage, we have a weekly close that closed bullish. We're looking at kind of taking off a little bit over 50% of that just to begin that kind of sell that gets a lot of people in, and then hopefully move around to the rally, breaching 38.19. And once we do that, moving towards 38.80, 3900. That would be the ideal situation here, creating a squeeze that can then be shorted off later on. Most polls are still coming in with around 56% bearish action. So most people are still bearish. Most of the puts are still sitting in around 360, 355, and 350. So down here, you would think is mostly supported by the market not wanting to pay puts off until at least November. And that's the interesting part. We've still got tons of puts sitting till November. Take a look here, 18th of November, 380 max pain, so higher than the current price, and 4 million open interest, with 360, 355, and 350 being the big put levels currently sitting there. Richard Ando's got a cool comment. Bottom indicated when the Nasdaq stocks above 200-day moving average hit 12%. Currently 17% suggesting continued decline. Okay. So you're doing like a Nasdaq code about how many are there. So bottom indicated when Nasdaq stocks above 200-day average hit 12%, currently 17%, suggesting continued decline. Interesting. You got something on that one, Richard? You can feel free to send it to me. I'm always interested in seeing your stats around it. Just send it to me in Discord. Thank you to the 1,615 people joining us here. We've got 4 minutes till the open. Remember to subscribe, smash the like button if you do enjoy it. Appreciate that. Paul says, Tom, have a poll of how long the new British PMs will last, lol. Well, maybe about as long as the lettuce, I've heard. Barber, Paul, we looked at Barber a little bit before. Frank, well, look, I mean, it's on its critical 15 lows, but it is just brutally bad, man. I'm sorry, it's bad. I mean, look, it's so low down now that you've just got to think it's where it should probably start to base. But geez, it's a brutal day today on it. Look, I've said this for probably $80 worth of barber decline now. I'm not going into. I haven't liked China in terms of investment stock. I used to years ago, absolutely, but now no way. Can you do these live videos more often? We do lives every day in the private community, just for half an hour. It is difficult for me to do them. Also, YouTube is not the best on running videos over the top of each other, unfortunately. Bank of Japan needs to push again, says JJW. Bank of Japan's in serious trouble, man. Thank you for the Monday streams. No worry. They're great to get tuned in for the week. This week, big tech earnings, so watch out. That's right. So just here's the earnings for anyone just wants to pause. Make sure, look, I mean, I'm not sponsored by these guys, but I think it's a very cool report. I mean, I get it weekly. I think it's awesome. Having these pictures, one of the best places I've been using it. Almost looks very similar actually to all those years ago. Man, I've been using it for so long, this thing. So you got your Microsoft, your Alphabet, Apple, Amazon, Meta after the close, before the close, Shopify. I feel like consumer discretionary XLY will be some of the most important reports to be looking for, just to think about how it is. Disney streaming is killing it. It's doing well, is it? How is old Disney? Let's have a quick look at Disney. Oh, not bad. Oh, inverse head and shoulders too. And off the base. Okay. That's not too bad. Man, Disney got killed, didn't it? Went down quite a lot. It's a nice little turnaround. I mean, if more stocks look like that, you'd think, yeah, this is pretty sweet. It's a little inverse head and shoulders off the base. That was a really nice accumulation before. What a great fake out pain level. This has got a kind of fake low, which happened the other day, and it rallied through on the session. Yeah, I quite like what you see here on Disney. I mean, it's not bad looking chart, is it? Andor's pretty good too. If you guys haven't, I just finished watching Game of Thrones. That was pretty awesome. Bit gruesome, but it was pretty good. And Andor is not too bad as well if people are interested. A lot of people aren't watching that one, so it's worth a watch. The rest were hideous, but it's not too bad. What about Enphase? Not a fan of the price at all. Love the company. I'm not a fan. Has it dropped enough? Not quite yet. Now we're about a 1 minute off base. It does look like it's trying to form. I will admit that. I mean, yeah, it's okay. It's okay. US 500. Let's move back over. So we're coming in here hot to the market. Let's have a look. Where will we open in terms of the close? It looks pretty similar. 37.52 is the previous one, and we are going to open right on that 37.69. So we've got a little bit of a gap to go down. Slightly positive here on the open. Still looking for further negativity through the day. I do not want to see a new high, though, followed by a low. That would be very bad. Ding, 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 guys. We are open. So let's have a look here through just the list that we've got going down. You can see markets have opened. We've got Amazon and Apple opening with slight greens. We've got companies like Square and whatever it's called, Block Media or whatever it's called now. Google only just up. Where'd Tesla open? Tesla opens down 4% straight into that. I'm just going to watch this. Let's put the Tesla on the chart. So it's opened directly in on those lows. It's just gone smashing straight into those previous low points. Not the best look for Tesla. Straight in there. That's where previous demand has picked it up. If it gets underneath here, though, I'm still thinking this 180 kind of area is very possible for Tesla. Unfortunately, it's the same with all of these automobile manufacturers. Let's quickly refresh this large chart here. I want to see what's moving here over the percentage today. And it looks like we've got declines in, is that percentage today? Let's see if that's actually updated. Maybe automobiles is what's getting flogged through this session. Yeah, Tesla down 4.48 now. NIO down 11.69. So pretty brutal stuff on automobiles. That continues their sell as a sector. And you can see the greens mostly outweighing. Again, we'll just go to the percentages here just to refresh it. But yeah, they're the ones that are getting hurt. So semiconductors also down, automobiles down. The big greens seem to be in healthcare. Health seems to be the favorite sector of the day so far. And it is important to understand your sectors. We do expect declines throughout the first start of the session. Barber negative 13%. Yeah, Barber is atrocity. I do feel bad for people that are in this one. It's just it's a brutal stock decline. Lots of big, huge rallies on this stock as well, and big comebacks that were in the vicinity of 60%, followed by huge sell-offs. Lows were about 58, 57 back in the sessions of 2015 and 2016. So stock prices really getting smashed down to those lows. If the market's going to accumulate ever, this is the area that you would expect it to happen in. But geez, what a dangerous stock right now. Tesla is underneath. Is it new lows? Not quite yet. Set a quick thing for new lows below here so I know. And new lows could kind of push Tesla, I believe, into potentially that unfortunate situation of getting down. Now, if you look through these stock markets, you'll notice the S&P 500 is holding at 0.11. The Dow is up 0.46. So what I was telling you is the sectors that are getting punished are these technology sectors, semiconductors, things that are in these markets. It's not an across-the-board sell-off today. JD down 16. Yeah. Truly Messiah says Charlie Munger loves the barber. Well, you better buy the barber if you need him up. No new low yet on the Tesla. Chances for SPY 369 today. Fairly high, I guess. 369, 370. Yeah, I mean that's pretty big potential, I guess. How will chip war affect Tesla's China factory? I don't know, JJW. I wish I did. Maybe we could get someone on the show that has more knowledge on that aspect. I just don't. XLE continuing to rip. Yeah, XLE has been very strong. It's going into earnings like it's the new second coming of the greatest thing in the stock market ever. We're like 2 minutes from the Tesla new low. Well, we'll just quickly watch it together. I do have it up here on the right-hand side. So Tesla new low would be formed underneath 202.25. Look at the stock market. The stock market's recovering and Tesla's just like, nah, I don't think so. I don't want to recover. I mean, that candle looks horrendous. But it hasn't closed, so of course we can do anything. Andre says, hey, Tom, can you take a look at the DAX, please? Yeah, we can load the DAX up. Kind of eliminated the DAX from more discussion points. We're just using it for the same reasoning. I'm looking for it here. I've got the alert set. We do check it each day. The DAX is showing the signs of strength. And this just shows, again, the sectors make a difference. The DAX is not filled with huge amounts of tech companies. Neither is the FTSE, neither is the ASX. And they're just made a new high. I mean, again, the DAX looking towards that 13,200. Not too much other than that to report. It looks okay. I mean, it's making a series of higher peaks and higher troughs. That's what you want to see in a trend. DAX is old economy. Yeah, exactly. FTSE is too. So is the ASX 200. The S&P 500 to a degree has a lot of old economy in it. But of course, the Nasdaq is not that. Tesla has a lot of competition now. Oh, yeah, it does. There's so many of them. Hey, I still think they're ahead, though. I mean, I like my Tesla. It's pretty cool. Tesla down is more of a China thing. Ford is up. Yeah, well, maybe. I mean, I saw a lot of automobiles across the board down. And you can see here Ford is up 3.12. Winnebago. Anyone got a Winnebago in the chat? Ferrari up 1.26. General Motors up 1.63. Workhorse. Oh, I remember. Oh, $2.33. Oh. WKHS. That brings me back to doing old streams. It's a piece of trash. Oh. Man, oh man. I remember this one. Huh. Poor Workhorse. Those meme stonks, they were brutal. And the sell-off has been horrendous. Oh, I forgot about this. $2.33. So bad. Sorry to abuse it, guys. I just, yeah, when I see these ones, I'm always like, nah. Finken says, well, I traded that back in the day. Quite a lot of people in the chat traded that back in the day. Probably thankful you used probably stop losses in this one. I'm sure someone out there, unfortunately, has this in their portfolio and they're cursing me. I'm sorry, guys. I'm sorry. Take it as a lesson in not buying crapper. Unfortunately, that's what does happen. I can't even remember how this started, whether it was a hideous SPAC or what it was, but I just remember it was super popular. Good buys now. Nah. Dead business, potentially. CGC. Canopy Growth Corp. Yeah, this one has Epic from back in the day. I thought it was much higher than this with Canopy. There's worse than this one. Tilray is worse. That's Tilray Bond. Tilray? Yeah, Tilray, 330. $300 to 330. Just show people what can happen. This is the pumpy, then the dumpy, yeah? And then the pumpy and the dumpy. You've just got to remember 3D printers, lithium, SPACs, all these sorts of things happen so many times. Meta negative 3%. Meta is in for a very interesting earnings. So Meta, it's a stock that I've been watching because I've had it. It actually took if you can believe it, it actually took the lows of 2018 the other day. And it's just hovering around that area. And you could seriously see it go like a 114. Tesla's still around 205, but finding a little bit of buying. Markets, you can see hyper growth down across the board. Old economy stocks, as someone mentioned before, going up. And that seems to be the gist. So nothing's really changed. If US 500 does make a new high and reject it off here, some bears will try to come in. I don't blame them at all. At that point, you're going to want to set alerts underneath here. We'll make a video about it tomorrow. Obviously, if it does occur, we'll have to change our opinion completely if that does occur, at least in the short time frame. At this stage, I'm still looking for ideally weakness into strength. And if we do end up just seeing strength, there should be some great opportunities on the horizon, at least in my opinion, with these markets. Meta are bleeding cash. Yeah, it's going to be hard for them to build further business. Tim says, aren't earnings a win-win either way? Bad earnings equals economy slowdown. Fed will push the brakes. Good earnings, good earnings. Yeah, Tim. Yeah, you could be right. Double win. Carnival looks like a juicy risk reward. I haven't looked at this one in a while either. The old boats. Wow, it's underneath the pandemic lows. There must be some form of horrendous debt problems. Didn't they have to refinance debt? I'm not sure on this business, but yeah, I'll set a little alert above here just to have a look. Tom, can you take a look at natural gas? I think it's back to a good zone for a long. You think the Widowmaker's good back to fun times? Are you sure about that? Yeah, you're right. I mean, it's at a key level of demand. That low down here is fairly significant. It's obvious. Whoa, it's ripping people's faces off in their early internal morning. It's a fair. How much has it already moved? 6.41%. This thing is, wow, it's crazy. You are correct. I mean, it's a key support zone. Do you want to do that though? I don't know. Neo's getting destroyed. Yeah, a few Chinese stocks unfortunately getting wrecked. 17.87%, 920. Yeah, I knew a guy that did very well off this stock in here in this rally, but knowing him, he would have held some. So unfortunately, he's probably holding the bags at $9 now. So many widows have been made, yeah, from natural gas for sure. Tesla going back to test lows. Yeah, look, Tesla, if what we think could happen to the US 500 does occur today, it looks like Tesla wants to go underneath, and I think it's just doing it. I think an alert will come up in a second. It's just it's smidgening it. Though I still feel like this 180 is happening for Tesla in the future, regardless of the market. It just seems likely. Jeffrey Hatch says, I've been short on natural gas and have been paid a small fortune in refunded fees. Interesting. Bounce Tesla of 200. I'm not sure if 200 is a serious level for it. I haven't really seen the evidence for that. The area where it is right now is the demand. Alejandro Pino, $20. Thank you very much. The beautiful dog in the kayak. I took my kayak last week. I was pretty happy with that. It's good. Thank you very much for the sort there. Never seen anyone use Shopify. Well, I think you can use it on YouTube now. What's the max pain for the SPY today? Thank you again, Alejandro. Appreciate that. Max pain for the SPY today, sir, is 371. So current price is above that price. Pradeep C19, Singapore $10. Brr. Is that like the printer? Or is that like Burry, Pradeep? Thank you very much for the support. Appreciate it. That's true, Brad. That's true. Till I almost got owned. Iceman says, I remember buying Neo at these prices in 2020. Indeed. Well, thank you so much for everyone that came out today to watch the live show. As per usual, we'll be doing these generally every week on the Mondays. Next week, I'll see what I can do. We will have our conference. If anyone's interested in buying virtual tickets or even getting in late to the conference, I think you might be able to still do so. It's in Gold Coast, Australia. And I hope one day, maybe 2023, to come over to America. Yeah. Thank you so much for everything, guys. Thank you so much for the support. The market just did a massive hit then. Did you see that? Some big chunky just goes in. See that chunk? Just chunked it. But thank you for the support on the channel. We are still hoping for rallies through this market, moving into ideally the 3880, 3900 zone, and then we'll find out how it deals with that. We want a 3820 high, not to be sold off from around this level. Now, if we get a new high above 3801, we don't want it to do this. If that happens, we'll have to reverse course and look for shorts. But at this stage, markets look fairly bullish, at least from a technical perspective. Thanks so much, guys. I wish you the best out there this week. Good luck if you want to join the private community. Free 7-day trial over at the website. And yeah, we'll make a great video for you tomorrow. If you ever have cool things you want to share with me, send me a message in Discord. I'm always happy to share high quality analysis with the community. That's what it's all about. Yeah. Bye for now. See ya. US 10Y just got slammed. Did it? It got sold off from, yeah. Let's have a quick look here at the old earnings. Monday. It'll be that Flash Services PMI. And the result is not refreshing for me, but that's what it'll be. Do I care about the Flash Services PMI? 46.6, so down. So the market's like, oh, look at this. It's effective. I guess that's good for the market, but who cares about that bit of news? Richard C says Flash Services PMI. Yeah. PMI was, crap PMI, good equals good PMI, everything PMI. So that has pushed the yields down. And again, we see yields going down. It's good for stocks, as we know. 2 year should also be down there. Let's have a look at the 2 year. Yeah. All right, got the alert underneath here. That should coincide, you would think, with new high for the stocks. If that does occur, if it gets down, we're looking for that to happen. And if it does, it could spell everything that we've been talking about, this squeeze and all these other things hopefully happening. Be careful out there. It seems like Tesla's on its own market at this stage, and I'm not too confident in that stock. I just got to be going with it. Richard C says bad for earnings, though. Yeah, theoretically, the stock market's going to do what it does, though. If it does it want bad earnings is good. I mean, that was one of the comments before. It could be so. All right, catch everybody. Bye for now.